Hello everyone, and welcome to this special weekday Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters across the franchised and independent dealer sectors.
Hello and welcome to this Motor Trade Radio weekday special. We're delighted to welcome back Jeremy Yea, Senior Valuations Editor at CAP HPI, joining us for his roundup of how trade values performed over the course of November. So welcome back to the pod, Jeremy. It's been a few months since we last had you on, but you're welcome back.
Yeah, thanks, Curtis. And thanks for having me back. I was usually off the subs bench every summer when Darren was on his holiday. So yes. Back in for this one.
Yeah. Well, I'm sure we'll be hearing more of you. It's great to have you on. It's great to have you on, Jeremy. Thank you. I mean, as always, we kind of now getting towards the end of the year. But to start off with, I mean, obviously, can you talk us through the headline trade values? I mean, obviously, we look at the 3-year 60 benchmark, but how they've performed and compared with previous Novembers, previous years, and what the year looks like.
Yeah, sure. So at 3-year 60, the nominal movement is down. It's down 1.6%, which is around £280, which is a really strong month for the time of year. I think cast your minds back to this time last year. It was a bit of a funny time, a bit of a difficult time for trade, for dealers. This time last year went down 4.2%. That was off the back of another 4.2% the previous month, and then a 2% month movement the month before. So in the space of 3 months, it did go down sort of 10.5%, which was really quite tricky for people to, I guess, absorb. It was a real funny time. There was a bit more stock around in the market. But for the year, like I said, it's been a real solid and stable year. I think if you value a 3-year-old vehicle in January to a 3-year-old vehicle at the end of the year, it's broadly flat, which is phenomenal. Really, we've only had three other years which have been stronger than that. So 2018, which was dubbed the year of the used car, that ended up at 1.8% up overall. The same for 2020. Well, we know what happened through 2020. That was the recovery back off the, the lockdowns and the pent up demand. And then obviously the one which stands out is 2021, which went up nearly 29%, or just over 29% overall. So to be down 1.6% seasonal average for this month overall, since we've been tracking live values since 2012, it's a 2.1% drop. So we're about 0.5% ahead of where we would usually be. So yeah, been a good month.
So I mean, that's obviously looking at that year to date. Are you, in terms of the month? Obviously, I mean, we always talk about the benchmark figure, that one that when the book is cut off and we get that single figure. But you're looking at the market live. As a team and as a business, how's the month looked from the start until now? Have you seen a slowdown? Have you seen a bit of a recovery? Has it been fairly flat throughout? What's the month look like?
It's been pretty consistent all the way through. It's just been a steady sort of monthly deflation. Now we did have obviously it was a bit of a strange week because we had half term the budget, and then we had the Finance Commission ruling, which I think just stopped everyone in their tracks for maybe a couple of days. Certainly from a dealer's point of view and from a funding point of view, it definitely did. But considering the headwind we had within that week, I would say it didn't disrupt too much, and it just seemed to just steadily fall. Sort of 0.1. Maybe we had the odd day where it dropped, I think 0.2, but most days it dropped down 0.1 or nothing at all. So stability. As soon as we got past that, I guess that strange few days, everyone, finance companies seemed to get their paperwork sorted and that line in the sand, and everybody moved on. And since then, I think it's been relatively positive in terms of how dealers have reacted to it, how the finance companies have reacted to it, and it's been. Yeah, we've not really seen a bit of a marked, downturn because of those three things. Mainly the budget and the finance commission. But yeah, even with half term, there was a few absentees, but nothing untoward, I would say.
And Jeremy, drilling into some of the detail and looking at age bands, did you see any notable trends across age bands over the course of November?
Well, 1 year dropped slightly less than the 3 year figure. That's 1.3, but a cumulative of about £400. And the 10 year went down 1.6, so bang in line with the 3 year movement, but down £74 overall. There's a bit of mix in terms of sectors and what have you, but yeah, it's been again, even at the younger age points, which you think might be slightly more affected based on maybe a little bit more new car supply into the market for some brands and maybe a bit more, OEM activity and what have you. But no, it's not really upset things as it stands.
And turning to the various vehicle sectors, any notable trends there? I mean, I did notice that SUVs, they are the biggest sector. So maybe start with SUVs. What did you see across that sector?
Well, I think SUVs, they roughly make up a third of our entire trade data supply now. So, and I think it rises to well over 60% at 3 years old. So, when there's more volume of something, it's going to add a little bit more pressure. But overall, it's only slightly ahead of the average of 1.7% or downward movement, £300. So, again, not hugely different to the averages overall.
And any observations on any of the other vehicle sectors?
Yeah, I think mainstream sectors have fared pretty much in line with the average. Coupe, cabriolet, and convertibles, they've gone down the most. I think that's pretty obvious to state that, bearing in mind the time of year, the weather we've had throughout the month, and I don't think many people are going to be stocking cabriolets at this time of year. Not at the minute anyway. So, but the other ones, the other standouts, I guess, the Super Mini, that dropped 1.7, close to £190. Lower medium, which I look after, the hatchback sector, that was slightly below the average of 1.4 or circa £190. So again, everything's probably bang in line or almost in line. The strongest sector, interestingly, was large executives. So that's sort of your A7, A8, BMW 7 Series. That only dropped 0.3, which is about £130. So it does stand out in terms of percentage points, but actually, it did come down a few, just over £130.
Yeah, and before we turn to fuel type, any notable winners or losers by model that you observed over the course of the month?
Well, I think I'll just start with the SUVs. I mean, with SUVs, if you break them out into subsectors, into size sectors, large SUVs perform the best. They only went down 0.6 or £190. Small SUV was down 2.2 or £250. The medium went down 1.9 or £350. The notable movers within that sector alone, Qashqai, that went down about £570 or nearly 4%. 3008 hybrid, petrol hybrid, that went down 5% or £750. And Crossland X went down nearly 5% or £400 as well. So there has been some notable movers going down, but we've had a few which have gone up as well, but I don't have those to hand actually. So, but overall, it's been a really good month with just some fluctuations between models, and I guess where there's a little bit more volume around of certain models, and certainly some of the models that I've mentioned have probably fared a little bit worse than the average.
And fuel type, Jeremy. I mean, obviously, fuel type is the detail, isn't it, behind a lot of what's going on in the market. I mean, what trends are you seeing? What are you hearing from the market in terms of the petrol and diesel for the month? And if I followed that up and think about obviously what's happening with the battery electric vehicle market, what kind of data shifts are you starting to see by fuel type, or what are you hearing in the market at the minute?
Well, I think I'll start with the moves at 3 years. So diesel and petrol went down 1.7%, both circa £300 overall. The best performing fuel type or drivetrain was hybrid, interestingly, at 0.7 or about £100 down. An EV at 3 years is down 0.9, circa £180. So for the last 2 months, it's been the best performing fuel type. This month, it's the second best performing fuel type. We're still broadly in line with, probably expectation, desire in the market. I think, dealers of the ones who are, I guess, actively looking to buy and sell EVs at 3 years, at a certain price points, are doing pretty well with them. And that can, seems to be a continuation that has been for, a majority of the year, in terms of people looking at them, flipping them quickly and making good profits out of them. And I think that is, set to continue, because we've got these really strange illogical relationships where, we've got EV examples compared to some petrol or even hybrids, which they book at thousands of pounds less. So still, there's some real good value there. So you can see why dealers are tuned into, I guess, buying EVs. Not everybody, there's still quite a large percentage of the market which still don't stock or advertise one in the last 6 months. But yeah, it's definitely, it seems to be the go-to drive chain at the minute, in terms of stock day churn and profitability and, price point, etc.
And do you think that, obviously there's some winners and not necessarily all winners or losers in that, is there? There's obviously still some models that do look very, very good value against their ICE equivalent, and some that are still probably under a little bit of pressure as they're entering the market. But do you think, you mentioned there in terms of days to sell and that kind of thing, are you hearing anything around part of that being because, the less work required on EVs, they don't need to go into the workshop for work, you can, as long as it's cosmetically okay, it can be up for retail fairly quickly and a reasonable margin retained?
I think so, yeah. I think, there's less moving parts on an electric vehicle. I think there's definitely some wins because of that in terms of where you put it through the workshop. There's obviously downsides to that as well in terms of service work, potentially, or return service work. But, I think when we're looking at a 3 to 4 year old or a 4 to 5 year old EV, and they're between 7 and 10 days, selling faster than a petrol vehicle, you can see the desire of why the market would want to go and buy one. Why the trade buyers would want to go and buy one, but yeah, I think there's definitely a win within I guess the preparation part of the trade buying activity for sure.
And just before we go to the break, are you seeing anything in terms of the year to date trends? Because we always we talk about the snapshot in terms of month on month and what's happening, but how's the year looking around the fuel types now? Is it fairly stable now? Are we still seeing a little bit of volatility? What's the sort of any year-to-date standout trends by fuel type?
I think overall, petrol and diesel are still, broadly in flat or just above, a 3 year old vehicle worth more at the beginning of the year. The end of the year, the beginning of the year. We've still got some fluctuations, I guess, with plug-in hybrid and EVs, and the way when we track it, the cumulative view. This does go back from December to December, and bearing in mind the November figures that we just do are for December's guide, so not to confuse anyone with that. EVs are still the fastest, falling, and they've dropped 13.7% overall in that 12-month view or in that cumulative view, with plug-in hybrid down 7.2%. But it has steadied. Since the autumn or since the back end of the summer, they actually rose a little bit, EVs, and just flattened out. So, it was on quite a fast downward trajectory, I think, for quite a few months, even through this year. But it's definitely found their level now, for sure.
Yeah, brilliant. That gives some sort of confidence in the market now, doesn't it? Because that's the key, isn't it? Giving confidence that they can buy into these vehicles now without that risk of huge volatility shifts in the pricing.
Definitely. I think, certainly at 3 years, these vehicles look extremely good value. And I think, the magic figure is probably under £20,000, and, anything less than that, again, even to 15 or 18, that's the sweet spot, I think, for that. I think some of the younger vehicles are still trying to find a relative place in the market and against their peers, potentially, who've been around a little bit longer than some of the benchmark EVs within the market. But yeah, I think that stability, and, people may have got burnt through those drops we've had, the back end of last year, especially, and I think if you look at how much EVs have fallen in the space of since September 22 to where we are, about 56%. So there has to be some value there, doesn't there? So hopefully that breeds just stability into what we've seen of late, and that hockey stick effect, if you like, of what we've seen.
We'll be back with more on Cap HPI's November used car market analysis after the break.
You're listening to all the chatter that matters on a special weekday episode of Motor Trade Radio. Powered by Motors, the driving force behind multi-site advertising.
Jeremy, each month you analyse retail activity by days to sell. How did they perform over the course of November?
Broadly the same as the last two or 3 months, to be honest. There's not really any big days in terms of, or the big differences. I think there's like one day or it's the same, between the previous 2 months. So really, just continued stability, even in the retail sector. Cars are moving, still at the same pace they were previously, which is again, great.
And the overall average, was it 40 days?
I think it's a little bit less than that. It depends by whether it's independent, supermarket or franchise, but broadly right. Just behind that sort of, yes, behind the 40 days at the minute, which is again, is bang in line with what you would expect for probably this time of year and what we've seen previously.
Yeah. And you also polled the views of the auction houses. What were they telling you about stock levels and demand compared to October?
Well, we've got the perfect storm, I think, in terms of stock levels are falling. Demand seems to be, literally the same or increased. As people, some retailers are looking to stock up for January. Some are quite happy where they are. But yeah, I think decreased of stock levels across the market, with demand broadly in line of the same or slightly increasing as well, which is again for the time of year and for late in November is where we are touching December. It's really, really positive.
And I mean, it's now time for looking ahead, Jeremy. I mean, we're now at the end of the year. I mean, we're talking obviously based on November's movement, but that's obviously year to year in terms of December to December, as you said before. And getting an early view, what are your thoughts as we kind of enter the December period? And, more importantly, as a sort of follow-up on that, what's your view at the minute around this stability and what you've just been talking us through there in terms of the year to date, of where you think, we're sort of thinking about prices and stocking as we sort of move more into the December period, into the new year of January?
Well, I think the sentiment that we've gathered throughout this month, whether it's from auctions, whether it's from retailers, whether it's from just buyers and what have you, certainly some of the conversations, is going to be more of the same, because stock's not going to increase anytime soon, I would say. And we're still got that real lack of the COVID impact of the registrations, and that's really played out in the 3 sort of 4 or 5 year old sector. And that's, I guess, as I said earlier, is sort of the sweet spot in terms of where dealer demand is for, and trade buyer demand is. And, we think it's going to be, I think a typical drop from December to January with seasonal at 3 years is about 1.3%. If it's the same, it wouldn't surprise us. I think if it was slightly less, it probably wouldn't surprise us in terms of the drop. So I think, more consistency. I think it's just going to, it feels slightly more predictable at the minute, which I think that's what's probably just, settled everybody's nerves, which is good, because this time last year, there was no predictability about the market. The trajectory was just down, down, down. And I think that was, a really tough time. So I think this is really welcomed by everybody, whether that's vendors or whether that's, retailers at the minute. And, stability equals, I guess, good trading conditions, doesn't it?
Yeah, I think you're right. I think, as you touched on before, I think that it gives confidence, doesn't it? I mean, you talk about return to normal seasonality, comparing it to last year, but when you in the opening comments of today, that, that comparing it to previous years, going back to when you first launched the live product, it feels like we're in kind of a return to some kind of, if there is a normal seasonality, it seems that we're back into that space again.
Definitely. Yeah, it does. It just, I think, there's more of a relaxed feel to things at the minute, rather than, people, frantically wondering what's going to happen. Certainly some of the conversations I guess have got a lot easier with the ones we have with our customers as well, put it that way. So yeah, this time last year, it was a little bit more challenging, let's say, but yeah, definitely much more enjoyable conversations to have.
yeah, I I can imagine there would be. I've probably fewer questions on the webinars when you do them on a regular basis at the end there, when you're talking a little bit more normal seasonality, a little bit more confidence in the marketplace. I mean, huge thank you, and it's always good to get a bit more of the detail, a little bit more of the sentiment behind, the numbers and of course the editorial. And a huge thank you for coming on today, Jeremy. As always, it's always great having you on.
Well, my pleasure. Thank you for having me.
No, it's great. And, as I say, if you are listening this morning and you want a deeper dive into the discussion that we've just had there with Jeremy into the November used car trends, then, it'll be on Jeremy's social channels this morning, and others from Cap HPI, including Devon Martin and Chris Plum and all the editors there at Cap HPI. Or you can go over to the website, which is cap-hpi.com, of which you'll find the full editorial for the November performance for December marketplace, alongside all the usual forecasts there. So that's available now if you want to dig into the detail a bit more.
But that's all for this special weekday Motor Trade Radio podcast. Many thanks to Jeremy for joining us. Thank you for listening. We're back with all the big car retailing headlines this weekend. Until then, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to this special weekday Motor Trade Radio podcast. Powered by Motors, the driving force behind multi-site advertising. Philip and Curtis will be back with the week's big motor retailing headlines on Saturday. Live, on demand, wherever you are, on your podcast feed.